Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
All right, we're excited to be on another episode of Kiss My Assets podcast. So we are going to be able to dive into a lot of the multifamily trends that are happening right now, what's happening in Arizona specifically. I'm Jamison Manwaring, CEO of Neighborhood Ventures, and have two great members of our team here, Bart Dill, Investor Relations, and Heather Andrews in Property Management. So we're seeing a lot of movement in the housing market. And I want to talk about some of the things that were impacting this movement. And the first thing I want to kick it off with is this year-end report from ABI Multifamily. The founder of Neighborhood Ventures, co-founder of mine, also is the founder of ABI Multifamily. They're a big apartment broker in Phoenix, sell more apartment buildings than anybody. And every year they come out with their year-end report that talks about the changes in the market for multifamily in Phoenix. And so this report just hit a few weeks ago, and I want to dive into it. If you're watching on YouTube, you can see this. If you're listening on the podcast, you can't see it. But the nice thing about this is you can download this report as well. It's free to anybody. This research is expensive research, and they give the data away to everybody. So that's a really cool thing. And I want to point everybody to the bottom left-hand corner of this report, where it basically details what's happened from a year-over-year change with multifamily properties, 10 plus units. So last year, 2022, going back 2022 versus 2023. So 2022, there was $14 billion in sales. Last year, $3.7 billion. So it went down 74%.
Slight drop off.
Yeah.
So for a broker who works on commission based on transactions, it was a slow year for ABI and the brokers in the industry. Now this comes off of 2 or 3 really busy years, but big drop off last year in sales volume. There is also big changes when it comes to the price per square footage. That went down a little bit, and there's some outliers as to why that would happen. There's so much less sales transactions that happened last year that some of these numbers look bigger than they actually are. But the price per square footage last year ended up being $312 per square foot, down from $370 the prior year. The other two things I would point at, they have occupancy rates basically flat, down 0.8% or 80 basis points. Average rent for them was down 4% based on their surveys. So we've read a lot of different data on what rent did last year, and I'm seeing it's basically flat to slightly down by a few percentage points. That's pretty consistent. Now, this also comes off of 3 really strong years of rent growth in 2022, 21, and 20. In those years, average rent growth for each of those 3 years was over 10%. So it was a year that things were flat. And then the last thing that I'll point out is that the number of units that were delivered, according to ABI's research, was basically 17,000 units, and that was up from 12,300 the prior year, so up 37%. So these numbers it's important to look at the data. It's important to see what the data means. And it's also important when you look at data to see if there's any outlying reasons why data could lead you the wrong way. Some of these numbers definitely stand out.
Yeah, I think it's something we talk about all the time in the office, where you have all these new units that were delivered onto the market. Consequently, rent stayed flat. People had the option to choose where they want to live because there's so many units to pick from. And then in the high interest rate environment, transaction volumes being down makes sense. Interest rates are above 7%. Buyers aren't going to be able to buy. Investors aren't going to be able to invest. Now, as we anticipate, the report talks about it, interest rates coming down. It seems like there's plenty of dry capital that's ready to explode in 2024 and 2025, which is exciting for us as a multifamily investment company.
I talk about this a lot, but it really comes down to supply and demand in real estate. So the question to think about is, if demand is strong and stays strong, but supply goes up, what should happen to the price? And if you've taken an Econ 101 class, if the demand stays constant, supply goes up, price should go down. And so for apartment renters and residents last year, supply was up. And so according to ABI's research, rent was down a little bit, a couple percentage points. And again, I've seen other research that said it was flat. It should have gone down more based on all of those new units that came on. But we have a very robust economy. We have a high growth market. Now, as we look out over the next couple of years, if demand stays constant and supply goes down, what will happen to price? And the answer is price will move up.
I knew that answer.
And these numbers are important to look at what's happened in the past. And we're also looking at numbers this year. But what's more important when you're an investor is not the rear view mirror, but the windshield where you're going forward. And in 2025, 26, 27, we are going to see supply go down. Demand stays constant. In a market like Phoenix, it's very high. Price is going to be moving up. Rent is going to be moving up.
Yeah. And I think we're seeing that a little bit. We're seeing that flat start to take off a little bit.
Yeah, and you're property managers, so you see this a lot when we're talking to potential residents. If they have a lot of options, they're harder to pin down. They're harder to get a lease sign, a year lease. So you're starting to see a little bit of maybe a lack of supply less than a few months ago.
A lot of interest. We're able to raise rents in a very reasonable way, but they're able to go up. There maybe is a slight concession at the beginning, but then it's our job to make sure it's a place they want to stay long term. And that's been easy to do. We make sure, we can provide that. It's a nice ramp up that's happening.
So I want to shift gears to let's talk about the TSMC plant up in North Phoenix. This plant is one of the largest economic drivers in all of the Southwest that's going on right now. This is a plant that government is really excited about. President Biden's been out here many times touting this plant. It's a $40 billion construction project.
Sheesh.
The article talks about 12,000 people at any given day, construction workers out there at the plant working on this. And this is not a short-term thing that's going to be done over a couple of years. This is like a 30-year construction project because there's 4 phases. We're in phase 1, starting phase 2 now, but each of the phases is like 8 years. So this is a long-term construction project. And then on top of that, the ecosystem of all of the chips that need to be built at the plant and then all of the suppliers to support that is also coming on at Phoenix. And so this is a very big deal. Anyone who's paying attention knows that when these types of projects happen, they drive growth for a long time.
My favorite part of it, I think it also shows they are here for the long term, is they started an apprenticeship program. They spent over $5 million starting this program. They've got their first 8 graduates that are now working, and they're putting a lot of money in to train people here to manage this and to work at these plants.
This plant is going to last longer than most marriages.
Yeah. But not yours.
Oh, that's forever.
Yes, that's right.
Yes, it is. And this new milestone is they placed the final steel beam at the top of its second facility. So that was a big deal. I'm sure there was a ribbon cutting and some champagne opened up there.
I was not invited, but I'm very happy.
And the plant has a lot of controversy. So we have a video, if you follow us on social media, that went viral a few weeks ago about the plant. To date, there's over a million views. Something like 10,000 comments. It's a controversial plant because people who have lived in Phoenix, they don't really want Phoenix to change in some ways. And they see this as a negative, building a big plant like this in the desert. Is there enough water? How is this going to change the valley? That debate is ongoing. For us as an investment company, we just look at how these things could drive investment. And that's why what we talk about here. It's not like everyone's supportive of this. And the plant's also had some problems. There's been some work-related injuries there. There's been reports that the work environment isn't great. I've talked to people who are in the plant who are foremen and lower level, and I hear that many people have great work experiences there. But when you have 12,000 people working on a construction project at the same time,
so many people.
That's complicated.
Yeah, it's inevitable. You're going to have some people who are upset.
I have a friend who works in an industry that's somewhat similar, but they're a little frustrated that they are pulling all the resources all the equipment is going there, all the workers. And so there's a little bit of that.
Absolutely.
But the change is inevitable. It's coming, good or bad.
Yeah, if you live in Phoenix, you know that this growth is here, it's coming. And no matter how much we might complain about or not like it, that's part about living here, is that we know that this is a place to be and a lot of people are moving here. And when things like this occur, it's going to continue. So Freeport McMoran is one of the largest employers in Arizona. They are a copper mine located. They have several copper mines across the state. They have a big headquarters in downtown Phoenix. They just announced that their big tower, they are going to be subleasing part of it. And in a way, this headline was kind of negative when it comes to office, because we know office space is an area of real estate that has a lot of pressure on it. Companies are leasing less office space as more people work remote from home, as they need less office space for people to come to. A place like Phoenix doesn't have the big footprint like New York or Chicago or San Francisco, LA, where there's millions of square feet of office available. You know, I've heard some estimates in New York, half of that square footage isn't being utilized right now. We don't have that kind of problem, but one of our biggest tenants downtown is now going to start subleasing at the tower. And we're going to pay attention to this, because if a lot of these towers start to have big tenants move out of them, it can impact our downtown.
I definitely see that. And you see that happening in many big cities like San Francisco. I don't remember what the number was. I'm not going to throw out a number that's false, but
I'd believe you, whatever you said.
yeah, it's a significant amount. I know the Salesforce building, I can say, was like 30% occupied.
That sounds right.
And it's a massive building. But you know, you have these places like San Francisco, Chicago, New York, where office is down. It's not just Freeport. You have companies like Wells Fargo, JP Morgan that have left downtown or are leasing out parts of their building. But there's other areas of commercial real estate that are up, including multifamily and education centers that have significantly grown in downtown. That's a thesis, something that we've observed in the past as well, where we've seen multifamily do really well in downtown areas.
They're connected, right? The more we see these hybrid schedules, the more people are working from home, the more people are looking at where they live, the apartment they're in, and they want a little more space or they want different amenities. So these really impact each other.
Yeah, definitely want to be by public transportation, close to employment centers, but then also in a community where there's other people.
So in this specific example, Freeport is moving, it's 250,000 square footage that they're going to sublease. They have about 1,000 employees in the Valley, in finance, human resources, and they're going to move these folks over to another location they have near the airport. And that location has been redesigned and expanded. And part of it is that location has flexible work and meeting spaces. So there's more flex work. People are able to work from home, come into the office every now and then. And this is supporting Freeport's hybrid work environment. So Freeport might be one of the companies who is really okay with hybrid work, remote work. I know a lot of companies are now saying, you got to come back to the office. We're not going to do remote work to the level that they did during COVID. It's definitely something to watch as real estate investors see these trends, is to see how the office market shakes out here.
Well, I think the good thing is the office space is not becoming available because of layoffs. The jobs still exist. There's still a tremendous job growth.
That's a good point.
They're just different kind of work environment.
All right. So back on housing, we're in an interesting environment when it comes to buying a house. It remains over 50% more expensive to buy a house than to rent.
Yep.
Interest rates are high on 30-year fixed loans. We kind of want to take a snapshot of where we're at here today with new data from Redfin and Zillow and CoreLogic. And CoreLogic is coming out and saying that annual prices for homes climbed 5.5% over the last year. So this is relative to rents. Rents were basically flat last year across the nation. To buy a home, the price of homes are up 5.5%, and then the interest rate is now higher also. So it's a double impact. The price and the interest are both up. That's why so many people want to rent right now. The cost of home ownership is more expensive than ever. And there's not a lot that can be done about this from a government standpoint and from a private enterprise standpoint. There's some natural restrictions to building homes. The cost to build is more expensive now. We've had this inflation that's happened for several years, and now that's driven up the cost. So anything you build today is going to be more expensive than it was a year ago and 2 years ago. So the government kind of has this double-edged sword where they're trying to keep interest rates high to keep inflation down. Those high interest rates make buying a home even more expensive.
Yeah, if you're buying a home, you want to really want it. You got to be willing to stick with a high interest rate for a while.
Yeah, a solution to the high interest rate environment and the price of homes being really expensive is, according to the article, to make it possible to buy a home, buyers are targeting less expensive and less competitive metros, and some millennial and Gen Z home buyers are resorting to home hacking, which refers to renting all or part of your home for extra cash. Often they're also putting in their funds together and buying a home outright. So I think we should do that, guys.
Well, my brother lives in my basement. Yes.
Yeah, that's house hacking.
Because the idea was he was going to save for his own home.
What's going on with that?
Yeah. He's made himself very comfortable.
So since January 2020, the typical U.S. home has nearly doubled in price.
Wow.
Up 97% to $21.88, and that assumes a 10% down payment. Home values have risen 42% over that time, but the cost to buy the home is basically double because interest rates were 3.5%. Now they're approaching 7%. So you have to put that in context. In 4 years, the cost to buy a home is double the cost that it was 4 years ago. So when I look at that, we can complain about it, and it's unfortunate if you don't currently own a home because you come in this environment. But I also believe that real estate is a scarce asset, and there will be more people who want to buy homes going forward that will buy these homes at these prices, especially as interest rates go down. There's people who are waiting because some people are deciding to rent forever. Some people, once they get a family, they're going to buy a home. We know that there's a certain percentage of them. And if interest rates go down, people are going to just come in and buy those homes that they haven't been able to afford at 6.5% when they come back down to 5%. So real estate is something that continues to go up going forward, whether that be an apartment building, whether that be a home. The one exception might be these offices that are getting vacated because of work from home.